With the Bitcoin halving set to take place in less than 20 days, I've went ahead and done some extensive research in order to look at the psychology of our last Bitcoin halving or halving, whatever you guys want to call it. And I've found some very interesting facts about how the 2016 halving or halving went down in comparison to how we're now seeing the price action to the bullish side for Bitcoin less than 20 days before the Bitcoin halving. We're also going to be looking at stocks and a very in-depth analysis on Bitcoin to talk about what's happening right now and whether or not we're going to dump, and if so, what price target we're going to be heading towards. As you can see with this chart, this is actually the 2016 halving, and the green line right here is showing us 20 days before the last halving that occurred. And I know I'm going to be murdering the word throughout this video. You guys always make fun of me about it, but at the end of the day, that's how I say the word. And so I hope you guys can be okay with that. But realize that 20 days before this event, you can see price action actually went to the downside. And then after the halving or the halvening in white here that occurred on July 9th of 2016, we eventually saw price action to the downside. And so I took some Google Analytics to look at how the psychology played part in the last halving, which occurred in July of 2016. And I'm going to talk about why I personally believe that the miners are going to bring the price down prior to the halving, and it's going to happen very soon, because as you can see, 20 days before is pretty much the time frame in which we're going to see a major move to the upside or downside. And in 2016, we actually went down about 30% before the actual halving took place, and then we actually even went a little bit lower after the halving before seeing the push to the upside. And so we're going to be going over that, so stay tuned. But first and foremost, I want to go over Bitcoin's analysis, because you can see we have this body of the candle crossing below this 50-day moving average, and then today we saw a push back up above the 50-day moving average. And so a lot of people are saying, oh, is Bitcoin bullish right now? Is this the start to an uptrend? And I'm going to talk about why I believe we're going to see some sideways action until we finally see a push to the downside and not the upside, due to the fundamentals and the technicals, alongside with comparing the psychology of the time period in 2016 to the time period of right now before the monumental event will take place in less than 20 days. And so when we look at this chart here, you can see Bitcoin is rounding a top here, just like we did here in early 2020. And of course, that led to the bottom of that $3,900 level. And right now you can see we did break up to the upside, but we have yet to cross above that 7,480 level or that $7,500 level. And until we can form a higher high, in my opinion, we have now went from an uptrend to a downtrend, because you can see if we look at the actual structure here, we actually broke this structure here where we had this falling wedge forming, and you can see this minor break, which shows weakness in any support level. Support levels are not supposed to break. And so when you have this falling wedge pattern here and you break a support inside of that, like you saw happen here 2 days ago, that shows weakness inside of that support level and the trend. And when we look at traditional markets, you can see the Dow also breaking its falling wedge, and this could also be considered a bear flag from a downtrend. And I'm going to talk about why I believe we're going to see another leg down in the traditional markets, like a lot of the big players are also expecting. If you listen to Mark Cuban, if you listen to Ray Dalio, everyone is talking about another potential leg down in traditional markets. And as you guys know, since the beginning of the year, Bitcoin has correlated highly with equity markets until March, where Bitcoin decided to go down with equity markets, but not go up when equity markets were pumping. So I have a chart to show you guys for that as well. And I see we have Sean, Atul, Rumbarar, and a ton of you guys on our live stream from YouTube, Facebook, and Twitter. Glad to have you guys on board. If you guys enjoy this content on a weekly basis, make sure to like the video, subscribe to our channel, and turn on those post notifications. As you guys know, we go live every Monday, Wednesday, and Friday. But I do want to mention, so we've got this ascending support. We've got clear weakness here as we've already broke this support level. Yes, we went back above it, but that could have easily been to clear some shorts out. And we saw a lot of shorts get cleared out because of this push to the upside. And we've seen sideways action for about 3 weeks now for Bitcoin in this price range. So for me personally, I believe that that is a bearish sign as we're not able to break that 7,500 resistance right now. And it's not necessarily Bitcoin that I'm bearish about in the shorter time frames. It's the fundamentals of the global economy with the global pandemic. Of course, a lot of people are on lockdown and quarantine. And I think that that's the main reason that we're not seeing the strength that we want right now prior to the halving or the halving. But more so, I believe that we've already priced in this monumental event that will take place in less than 20 days. And it's because when we look in the past, in 2016, we were already priced in heading into the 20-day mark. And so I have a chart I'm going to show you guys, so stay tuned, that will also prove this assumption based on some Google Analytics. But before we do that, I want to do some RSI analysis, one of my favorite confirmation indicators. And this is Bitcoin on the weekly RSI. You can see we didn't become oversold from that big drop down to 3,900 on March 9th. And of course, we went back above 40. If you guys know RSI, a little bit more of an advanced way to look at an RSI is anything below 40 would be considered bearish. Anything above 60 would be considered bullish. And then of course, anything above 70 is overbought. Anything below 30 would be oversold. And you can see we did come down and break that 40 into the bearish range, but we quickly jumped above 40 and didn't become oversold. And so for people to assume that we were oversold at 3,900, I think the RSI is showing us here, obviously we weren't completely oversold. And interestingly enough, when we go on the daily RSI, you can see, yes, we became oversold, but when we look at what happened so far, we did go above 40 into that neutral range, but we have yet to cross into the bullish area above 60 like we did here in early January, where we saw Bitcoin go all the way up to 10,500. And so you go to the 4-hour chart, same scenario. Initially, we did come up and become bullish for a little bit, but then we went back down into the neutral zone and we're still finding resistance at that 60. So looking at the RSI as a confirmation, things still look bearish in the shorter time frames. Of course, when you go to an hourly RSI chart, things are bouncing on 60. You could assume we might see further action to the upside. I just don't believe that until Bitcoin can prove to us that we're not seeing another rounding top like we saw here at the start of the year, that we're going to start to see some sort of pressure to the downside. And so what I decided to do, a lot of people are talking about that 50-day moving average and how we broke above that 50-day moving average. Well, interestingly enough, if we look at how Bitcoin reacts to the 50-day moving average in the past when it's broken out, you can see the body of the candle always closes above the 50-day moving average during a breakout and never closes on or below that 50-day moving average after initially breaking out to the upside. So realize right now, we initially saw the body of the candle above the 50-day moving average, but then on the 19th, we started to trend down. And on the 20th, this body here closed below that 50-day moving average. You can see here in the past, when we look at that 50-day moving average, the initial breakout where we went above that 50-day moving average, we never closed back below or on that 50-day moving average. If we were to even go a little bit further here and look at the bottom from the 2017 rally where we went above that 50-day moving average, you can see the body here, as soon as it closed above that 50-day moving average, it never came back down and closed below that 50-day moving average. You can assume here that yes, this body of this daily candle did close below after going above, but we didn't really go above that 50-day moving average. We didn't really break out so much. As you can see, the wicks were still inside of that 50-day moving average. So we never really saw a full candlestick like we just recently saw above the 50-day moving average, and then another candle after that break back down below. So to me, it looks like a fake out, which in a $100 billion market is highly probable. And I think it was to clear shorts out before we see the breakdown to the downside. And I think that the whales are holding time off right now as equity markets find an ultimatum on whether or not they want to continue to the upside or go back to the downside. And of course, I highly advise you guys, if you are in equity markets, to be very careful over the next 2 weeks as earnings are being released with all of these companies, because most of the whales, in my opinion, have bought the hype and are going to sell the news with these earning reports, and realize that this rally could have been the last corrective rally before we see another leg down and potentially a 50% full retracement in the equity markets as we head into this global recession, or some of you want to call it a depression, but realize that the fundamentals are still there, and that yes, we might not be seeing as much fear right now, but I'm going to actually show you guys this chart here. If you look at a fear bubble stock chart, we are at a point where potentially people right now are feeling like things are returning back to normal. And I'm sure you guys have seen this chart before, but this is all based on psychology, because once again, I've been trading since 2010. I understand that 80% of trading is psychology, while 10% is technical and 10% is fundamental. So this chart really is important, but you can see when we see any sort of top and we see a big push down, there's denial, which we could say a lot of people were in denial with this recent push down. I'd love to hear you guys' opinion in the YouTube chat, the Twitter chat, the Facebook chat, even in the comments. But correct me if I'm wrong, but are we here at the point of despair, which is typically the bottom of any corrective phase, or are we here where there's a bull trap and people think things are returning to normal? And you can assume here that that's the case, because when you look at the majority of the countries that are locked down right now, everyone's sitting home. Of course, they're not going to be as fearful as they were a couple weeks ago when people were just starting to get locked down and people had no idea what was going on. Right now, people have had the time to settle, think of things. They truly could feel like things have returned to normal. But the problem is economies have yet to open up. And once we see economies open up, that, in my opinion, is going to breed more fear. When people realize, okay, we've got 20 million people unemployed in the last 4 weeks. By the way, unemployment numbers come out tomorrow, so we'll look at that on Friday. But so far, 20 million jobless claims in the United States alone in the last 4 weeks. We're seeing Disney 2 days ago announce 100,000 layoffs, right? They're going to actually apply for unemployment for all their employees. We're seeing the federal bank quantitative easing like we've never seen before in history, trillions of dollars. So there's obviously something going on. Trump just 2 days ago announced a ban on immigration for 60 days in the United States to prevent immigrants from taking jobs from Americans as the economies open up. If that doesn't show you that there's something going on, then I don't know what will. So realize that people might think that things are at this point. If you guys believe things are at the return to normal here, say I in the chat. And if you think we're at this despair area where we've already bottomed out, I'd love to hear why you think we've bottomed out in the chat as well. But I believe we're seeing just a slow push up before earning reports are pushed. It's the perfect gap right now while everyone's home to drive the markets up. It's a perfect time to drive Amazon up, right? When we actually look at charts and we look at what's actually driving this market up right now, interestingly enough, we all talked about this on our video last week on Friday, but really what's driving the markets right now are the tech stocks and the big tech players like Netflix and Amazon. Now realize when we looked at the trends of these tech players, we saw that at the end of the day, Amazon is not seeing so much significant traffic that it deserves to be so high up and seeing new highs during a global pandemic and recession. And so when you look at the Qs here, this is one of my favorite leading indicators of the traditional markets. This is encompassing all of the subsector of just tech alone. The majority of this is Amazon, Microsoft, Apple. You can see above all moving averages, things look very bullish. But then we look at the other leading market indicators, one of my favorite here being the Russell 2000, which encompasses all of the smaller companies in the United States economy, which is really the backbone of this economy. What you can see here is we're below all these moving averages. This is one of my favorite leading indicators, and it's the one that's showing the most bearish signs. And then my second favorite here, the transportation sector, including airlines and transportation companies, all below those moving averages. And of course, if we look at some other leading market indicators, we looked at the Qs already, but if we look at the semiconductors, has to do with technology, not as bullish as tech, but still fairly bullish. In my opinion, it was the perfect way to pump up the major indices before we see the next leg down. And if you guys are on our Discord, you know I posted that market update about the Dow and how I believe we could have possibly have seen the top already. And of course, if you guys haven't seen that, we looked at 1929 in comparison to today, because Ray Dalio is one of the largest hedge fund managers in the world that owns Bridgewater Associates, which is the largest hedge fund in the world. He said it in an interview, and he continues to say, this is worse than the Great Depression. You can see so far this chart is playing out. We have not crossed this resistance, this major resistance here. And if you look at the 1929 correction, we initially saw the same big push up before we eventually saw a 90% correction in the markets and the major indices. And this was specifically the Dow Jones Industrial. So realize that at the end of the day, there is a huge potential that we see a lot of fear come back into these markets. And of course, Bitcoin will be affected, as what we're going to see is what we saw in the beginning of April and the end of March, which is a liquidity crisis. People rush to liquidity. They rush to cash because they don't know what tomorrow holds. And if that happens, then Bitcoin could be on the verge of what we saw here 20 days before the last halving or halving or whatever you guys want to keep making fun of me about it. It is what it is. But another 30% drop potentially for Bitcoin. As you guys know, my target is that 200-week moving average. In the past, it's proven to be a very reasonable place of purchasing Bitcoin in the long term. When Bitcoin initially bottomed out, for those of you in our Discord group, I posted an entry at 57.50 up to 67.50. That was our long-term entry. Hopefully you guys have either taken profits already on those entries, or you have your break-even stops in place just in case we see this next leg down. We know there's demand for Bitcoin around 3,900. Interestingly enough, as much as I say Bitcoin correlates with traditional markets, when we look at a different chart here showing how Bitcoin correlates with the traditional markets, and this is why it's important to understand what I'm saying, you can see here in March, when we started to see all this mayhem, Bitcoin decided to stop pumping with traditional markets, but it did go down with traditional markets. So what I mean by that is when equities were down, Bitcoin was more than willing to go down. But when equities were going up, Bitcoin didn't pump. You can see in this chart once, twice, three times. And so to me, that shows that yes, there's demand for Bitcoin. And the reason there is because it corrected a lot faster and it bottomed a lot faster than equity markets. It did it on March 9th, while equity markets took until March 24th to bottom out. So it decoupled itself when it realized that it was becoming way oversold, and that yes, there's a liquidity crisis, but it's not going to affect Bitcoin as much as it's going to affect these overbought markets that are worth trillions of dollars, and the feds are pumping trillions of dollars into these markets. And a lot of people are saying, oh, well, feds aren't buying stocks. They don't have to buy stocks. The feds have loopholes. They give the bank the money and the bank buys the stock, right? Who knows? The point is the feds are putting money in the market. They're buying junk bonds. We know the money is going into the market. Doesn't matter in what form. The point is it's happening. So understand that. Why is Bitcoin not pumping up with the Dow right now? Why is it not pumping up with the major indices as it's supposed to? And it still correlates when it goes down. I think it's because we saw a lot of demand for Bitcoin, but the halving, the halvening, whatever you want to call it, is coming up in less than 20 days. And interestingly enough, I'm going to go over this very, very cool chart here, because guess what? We predicted a lot of things in the past using this Google Trends chart. Now, this is what the title of this video is all about, and this is why I want you guys to pay attention right now. And if you're enjoying this so far, make sure to hit that like button and subscribe to the channel if you guys haven't already. But realize this, 80% of any market that trades publicly is based on emotions, right? Of course, there's manipulation, insider trading involved, but 80% is emotions, right? 10% is technical, 10% is fundamental. We look at Google Trends and Bitcoin halving here in 2016. June 12th to June 18th of 2016, we saw a small spike up in Bitcoin halving interest, right? So we have that time period here in this box, as you can see. This is that time period where we saw that initial spike. Guess what? That initial spike was actually what ended up being the top before the halving or the halving actually happened on the 9th of July, right? So this was that time period that you're seeing, that initial interest, right? And then guess what? This is when the laggards came in. The people that came in late became interested in Bitcoin. And then we saw this major interest come out of nowhere. And that lasted from July 3rd to July 9th, right up until the halving or the halving, which happened on July 9th, right? So we saw that lead into peak interest. Guess what we're seeing right now? We saw an initial push up, and that lasted from February 9th to February 15th. Guess what? Bitcoin basically topped out around that time frame. And then you can see here, oh, sorry, my big head is covering it up. I'm going to move for you guys. So you can see here, Bitcoin initial interest topped out here, basically around the top, right? And then it started to push itself down, just like we saw here. And then we saw the laggards come, right? The reason I say this, and by the way, the reason I made the title of this video, Bitcoin halving already priced in, I had a really good friend of mine, very wealthy, very successful, call me today and say, hey man, I heard there's this Bitcoin halving or halving coming up. Would you recommend that I purchase Bitcoin? And obviously I gave him my opinion. Nothing that I give is financial advice. There's a reason I haven't registered myself as a registered financial advisor. It's because my lawyers have recommended not to if I want to continue to create content for our community. And the reason being is you become very regulated when you are registered as a financial advisor. And so we have clear disclaimers in place for that. But realize that what I said to him was, hey, dude, listen up. I'm going to do some research for you because the fact that you're calling me about this tells me something, right? So I started to dig a little bit deeper, and what I'm realizing is, guess what? We're seeing this big peak come in 20 days before the halving, just like we saw. You can see Google Trends right here. It's showing that we're going to go a lot higher. And so what's happening is we're seeing those late comers come in and realizing what the Bitcoin halving is. Well, guess what happens when that happens? So this box right here, this second box to the right over here, is when that peak actually occurs. Interestingly enough, price does not get affected by that at all. And the reason that happens is because the smart investors, the institutions, they already know about what's happening in 20 days. They've already priced this in. They've already put their money in, right? But guess what? The people that are coming in now are the ones that are going to get fooled. Because look what happens. Bitcoin halving comes, the halving comes, nothing happens. Price goes sideways. Very similar to what's happening right now, right? 6,500 to 7,500. Price is going sideways. And then what eventually happens? Does price shoot to the moon? No. We see a correction, almost 15% down. So those people, they take their profits and they take the money away from those that came in late, right? So realize that this time frame is showing psychology. Why does this matter? Well, we're obviously seeing that the psychology that's playing part today is very similar to the psychology that played part in 2016, where the halving is already priced in. I'd love to hear what you guys think about that. Blake James says 401k, boomer alert. Eduardo says, I'm in Big Rig watching you live from Phoenix. Keep up the good work, brother. Thank you. Appreciate you. I wish you the best there in Phoenix. I hope things are safe and sound there. Andrew Fisher from YouTube says, yeah, that's really interesting. Great point on the Google searches. Thank you so much. Max says latecomers, aka greater fools. Well, I've got some more interesting charts to show you guys here in just a second, but I think that this is a very interesting statistic here. So to continue on, realize that at the end of the day, when we look at the leading indicators in the traditional markets, things are not looking good for these subsectors, the ones that make up the backbone of our economy. We look at the financials, still not above any moving averages. So I think that the tricksters and company came in at the right place, and that was tech, to manipulate the markets before we see the next leg down. Because as you can see, we've got this bear flag that already broke in traditional markets. So in my opinion, what's happening right now is Bitcoin is waiting. It's breaking time. It's holding the clock until we see the ultimatum in traditional markets. When is that ultimatum going to come? Well, when we look at traditional markets, I am eyeing this 23,000 Dow. Why? Previous resistance, previous support. In my opinion, anything below that 22,800 on the Dow is going to be a breakdown to another potential leg down. And I say that with the confidence of Ray Dalio, Mark Cuban, some of these large investors, these historically correct investors, and understanding their mindset, I think, is the most important thing to realize here. And if the equities go down, fear comes back into the market, and Bitcoin goes down. When we look at the fear and greed index, what you can see here is we're at 19. Fear is starting to subside a little bit, but understand that the global pandemic is still at play. Economies have not even opened up yet. How are people losing their fear? We went from having a fear and greed index of 8 like 3 weeks ago or 4 weeks ago, or I think it was 5 weeks ago. It's not even reflecting here on this chart, to now 19. Why? Well, it makes sense that there's less fear. People are at home. They're not doing anything. Everything is still locked down though. So a tsunami comes and hits our country. Let's say that a huge tsunami comes, hits all of the United States. Well, guess what? We don't know what happened from that because everyone's at home and they're not allowed to come out, right? The economy has not opened yet. So we don't know what this tsunami has done. Perfect time for Trickster and company to come in and say, oh, perfect, let's pump this market up, because I'm sure a lot of them probably lost money. Nobody saw this global pandemic crashing markets right when 2020 started in Q1, right? And so they come in and they're like, all right, well, let's at least bring the markets back up so we can get some of our losses back. Well, guess what? 35%. Same correction that we saw with the Dow Jones Industrial in 1929 when we had similar fundamentals. Unemployment rate went from a record low of 3.1% to 25% in 4 years. Right now we're seeing unemployment rates in 4 weeks go to 20+% after record lows of 3.2% in the last couple decades. Interestingly enough, the same market movement in the market as 1929 as well. I understand fundamentals are different in certain ways. Technology wasn't there back in 1929. But guess what? That was a vulnerability that people utilized to allow this to happen. I'm sure in 1929, there was another vulnerability that allowed that pump before the next leg down. So I might be wrong, right? Here's how we know I'm wrong. This 50-day moving average, obviously extremely significant for the Dow Jones Industrial. If this breaks, things could change. If it doesn't, I'm sticking with the plan, and I'm saying that we've got a falling wedge here, a bearish flag, and we could potentially see more lows. And of course, we know Bitcoin loves to correlate with these equity markets when things are going down, especially after March. And so other than that, I'm glad you guys got the majority of that. I just wanted to go on that rant. Another fundamental indicator here, this chart I pulled 13 hours ago, USDT balances on exchange, another all-time high. So how are you going to tell me that the Bitcoin halving is already is not priced in when people know it's coming in 20 days, but most people have their money on the sidelines right now, right? So we're obviously seeing a lot of USD on exchanges. They would have came already. They're waiting for something. Are they waiting for higher prices? No. Are they waiting for lower prices? Most likely. So understand the psychology here. The psychology is 80% of this. And I'm backing this with fundamentals. I'm backing this with charts. I'm showing you guys what I've got, and I'm letting you guys make your assumption. Understand things could change. How do things change? Bitcoin breaks 7,500, right? If that happens, okay, now we've formed a higher high, and now this does not become valid. We're not rounding ourselves into another top. I'm just being the umpire here. I'm just taking a step back and showing you guys both sides, but understand there's a lot of bearish signs here. And when we're going sideways, that's a sign in the markets that the tricksters and company are holding the clock and waiting for the next big move. And whether that's a continuation of the same trend or that's a reversal, we don't know. The point is, we looked at that 50-day moving average. We already saw a candle body close below the 50-day moving average after already seeing a candle body close above it. We've never seen that happen in the past when Bitcoin broke out. If we were to look at this chart again and see the times that did happen, I guarantee you Bitcoin was bearish amongst all of those times. So why don't we look at it here? We look at a daily chart, right? You can see here, fake out, right? Bitcoin breaks above this 50-day moving average. Candle bodies close above. Candle body eventually closed below it. And guess what? We saw a new low form, right? So invalidated right here. 50-day moving average, it breaks. But guess what? Bitcoin kept going down, right? So every time we saw a breakout, what's important here is pay attention to the breakouts. Every time we saw a breakout, Bitcoin's candle body stayed above that 50-day moving average. It did not come back down below or even flirt with it. It went right above. You can see a real breakout here. Went straight through that 50-day moving average. But you can see here, we flirted with that 50-day moving average. Guess what? It was a trap that eventually took us down and we saw new lows, right? You look at our video on Monday. If you guys, this isn't convincing enough, look at the spent outputs and that chart that I showed you that we saw an all-time high on Monday for that chart. And the last time we saw an all-time high on Bitcoin spent outputs was October 28th of 2018, where guess what? It was the day we went sideways until we saw a big capitulation down, right? So realize this, at the end of the day, there's miners right now that are going to be less profitable in 20 days because of their supply getting cut in half. And in my opinion, they're either going to want to cover their losses or set themselves up to continue operations. And that can't happen by holding Bitcoin, where the world still runs on fiat currency and there has to be a transition from Bitcoin to fiat. So the point is here, I'm waiting for the 200-week moving average. In the past, we've seen that 200-week moving average act as a very, very confident level of entry for Bitcoin. When we look at any sort of chart here that actually has that 200-week moving average priced in, you can see here, for example, we saw a 200-week moving average act as the bottom here in 2018. We saw that act as the bottom from this huge rally down. And in my opinion, it's not going to hurt you to wait and see, all right, will price action come down to 5,700? If so, I think that that's a great entry for Bitcoin for the long term. And with that being said, I hope you guys enjoyed this video. I'm going to peace out here. It's 1 a.m. It's a Wednesday night. I'll see you guys on Friday. I'll see you on the Discord. Danny on Twitter says, what's up? Enjoying this content. Thank you so much. We've got Jonathan on TradingView. Good to have you. Sean says, great video on Monday. Thank you. Tolek says, great content. Naeem, thank you. Well, I appreciate you guys. If you appreciate the content, like the video, why don't I give away a book here? Principles by Ray Dalio, one of my favorite books on investing. He'll talk about the 10 to 12 year market cycles. Guess what? This market cycle went from 2008 to 2020, 12 years on the dot, and we crashed. So I'm going to give this away. The question of this giveaway is, which analytics did I use to compare the Bitcoin halving chart to the psychology of what we saw in 2016, or the halving, whatever you call it? What analytics, what website did I use? It's very simple. It's on the thumbnail. Answer that question in the chat or in the comments. I'll give away a book for the comments in the chat. All you have to do is make sure to like this video, subscribe to the YouTube channel, and turn on your post notifications so you guys are notified of our next video. Let's see who wins this book on the chat. First person, Tiber Farkas, that shows up on my screen. He said, Google, you're correct. Go ahead and send me a message on